All right, well, Warner Brothers Discovery shares are falling after missing expectations on both the top and bottom line in the fourth quarter. Now, the media company seeing its studios network and advertising revenue fall as the effects of the Hollywood strikes lingered into the end of the year. Let's talk about it with Rich Greenfield. He's LightShed Partners media and technology analyst. Rich, it's great to see you here. So let's talk about these results and what it means for the broader streaming landscape. The thing that stuck out to me was the fact that they are making some progress when it comes to the streaming business and what they are seeing there, specifically what they're seeing from Max. I guess put that in perspective for us, just in terms of how much more optimistic, maybe are you more optimistic about what the rest of the year will potentially look like as a result of that?
Look, I think investors are panicking right now. It's when you see the stock down 10% or so pre-market. I think the fear is that the company was unwilling to give any form of guidance. They've been pretty vocal in the past about talking about 2024, even going back to when they closed this transaction. And while numbers have certainly stepped down over the course of the last several years numerous times, they've always been pretty forthcoming with, what the year ahead looks like. And this was the first time that they basically said that they just can't do that. And I think the sort of fear that is sitting with investors right now is the concern that numbers are coming down and that, sort of the inability to guide is sort of, another way of saying we're going to be lower than we previously anticipated. So they're doing a great job of cost cutting. There's no doubt that David Zaslav and Gunnar Wiedenfels, their CFO, they've done a great job of living up to the free cash flow numbers that they promised Wall Street. The challenge is they haven't been able to grow the business. And I think what you're really seeing from investors is it's hard to pay meaningfully for a company if they do not believe that there is future revenue and earnings growth. And so you can cut and certainly generate cash in the short term, but cutting and cost cutting is not a long-term strategy. And I think that's sort of the reaction you're seeing in the stock today.
So then, Rich, what needs to change? Because yes, like you said, free cash flow was one of the highlights in this quarter at $3.3 billion, above what the street was looking for. Some speculating whether or not that trend can continue while they are paying down debt. But I guess what else do you think is necessary in order to win the confidence of investors, which clearly many don't have right now?
Look, we think they have to shut down the Max strategy. I think we've been pretty vocal, very vocal, that Max is a flawed strategy. You already see them starting to license a large part of their content out to Netflix. Look at things like Ballers on Netflix now, and like all of the sort of 6 Feet Unders, those key titles now are showing up on Netflix. Like, I think we're at the point now where HBO is an incredible business. There is it is a one of a kind global iconic brand. That said, I think the idea of trying to build something far bigger just isn't working. And I think just from a, was there a way to do it? I'm sure. I think given where the sort of legacy businesses at Warner Brothers Discovery are, meaning the challenges facing linear TV, whether we're talking, Discovery Channel, whether we're talking TBS and TNT, like those businesses are facing tremendous industry disruption, headwinds. And I think given those headwinds, you have to take a different strategy in streaming. And I think, essentially scaling back, becoming more of just HBO, really focusing specifically on the US, abandoning sort of global desires, and really focusing on being an arms dealer of content to third parties and stopping this trying to be a sort of a broader streaming service. I think it's inevitable. I don't think management is there yet, in terms of like what they want to do. But I think over the course of 2024, we think they're going to get there, and you'll see a tremendous shift in strategy.
Wow. Rich with the Ballers mention. I'm not sure who told you my viewing history, but kudos to them for getting that data. Rich, while we have you here, when we think about sports and this tie-up that is attempted, does the street believe, do you believe that there's a high probability that this will actually be consummated between Warner Brothers Discovery, Disney, Fox?
It's a great question. I don't know. I mean, look, everyone has always, everyone's been preaching for a long time from a consumer standpoint, more flexibility, right? Like, you don't want this channel, you want that channel, you don't want to have to pay for everything. So the idea of smaller bundles is not new. It's never been available. And so do I like the idea of programmers offering smaller bundles? Absolutely. Is this smaller bundle with sort of a slice of sports, is it really that compelling? Hard to know. I mean, I worry from a cord cutting standpoint that there's people with YouTube TV or Hulu Live or Comcast who look at this and go, God, I need to have Peacock for WWE, or I need to have Paramount Plus for Champions League. Well, I already have those two. Well, if I can get this skinnier bundle, I'll drop down, save myself $20, $30 a month. So I worry that there's sort of a cord shaving element to this that isn't so great for companies like WBD. So I'm surprised in many ways that they're part of this. But look, I think from a consumer standpoint, offering more options, for all the viewers that are watching this right now, having more options is something people have wanted for a long time. So I think it's very consumer friendly. I'm just not sure it's great for the health of the industry overall. And it'll be interesting to see whether we see other smaller bundles, because I would assume every distributor is now going to be putting their hand up going, hey, I'd like to do this too. And I want to offer Fox Sports without Fox News. I want to offer TBS and TNT without CNN.
Right.
That's a Pandora's box.
Hey, Rich, just lastly, while we have you, what's the core way that this company can go about extracting more value from its current subscribers?
Look, I think the reality is people are going to be subscribed because they're passionate about the HBO content. And I think, sort of focusing on the pieces of content, you've seen HBO, I'm sure, for 20, 30 years. There's this type of programming that it's known for. And I think sort of centering on, a major piece of content every quarter is probably the future, and is probably enough. It may not be as big of a business globally, but it'll be a much, much more profitable business. I think what people are forgetting today is HBO before Max was a $2.5 billion EBITDA business. World has changed. Maybe it's only a $2 billion business, but relative to sort of Max at break even, there's still a long way to go if you simplified the strategy.
Rich, speaking of strategy, you mentioned that bundling makes sense. You are a fan of it more broadly speaking. When it comes to maybe future consolidation, obviously long rumors of that, whether or not that's going to really come to fruition this year. How do you see that playing out and the impact that it's going to have more broadly speaking, obviously not only in traditional TV, but really the leadership within the streaming space?
We believe that all of this is great for reporters to, you've seen lots of news stories and lots of headlines, and it's fun to talk about consolidation, but I think in the midst of what is going to be a very spicy, I don't know what the right word is, but let's just say spicy presidential election with a relatively hostile antitrust administration today, and with a potential administration, if you switch to, let's just say Trump, who has been pretty hostile towards legacy media companies. I think the idea of any form of M&A this year is essentially DOA. Like, I just don't think it's going to happen. I think you keep hearing lots about it. People talking about Paramount, people talking about WBD. I honestly just don't think M&A is going to happen this year. And all of these companies are not going to have M&A as a lifeline. They're going to have to figure out how they survive without M&A.
All right. Rich, always a pleasure getting your insights here. I guess we'll all just have to wait for 2025 for White Lotus to come back on HBO Max. Rich, appreciate the time as always. Rich Greenfield, LightShed Partners. Appreciate it.